We are recording now. Welcome. Thanks everyone for joining us. I am Brian Bolton, finance professor at the University of Louisiana at Lafayette. Welcome to our UL System Financial Wellness Series as part of our Bridging the Divide summer series. I'm a content expert for the UL System on financial literacy. We have 5 content experts that each has a job at one of our 9 universities, full-time job at the universities, but we are partnering with the UL System to focus on certain roles. My content expert area is financial literacy. We have mental health, research and grants, open education, open access education, and online learning for the other 4. And they're doing, each of those content experts are doing their own series. My series is 15 sessions on financial wellness. And today's topic is financial and tax planning for international students. I am biased. Most of the financial wellness work I do at the University of Louisiana at Lafayette, maybe not most, but it's the one program I do more than anything else is with graduate students. And every semester we do a session for international students. And it's one of my favorite because we answer questions that about finance, about campus, about being an international student that maybe aren't answered or addressed elsewhere. So I'm going to have fun for the next half hour, and feel free to ask questions, feel free to engage. Again, my contact information, brian.bolton@louisiana.edu. Feel free to send me direct messages or emails about specific personal finance issues. As I say over and over, personal finance is personal. Your situation is different from mine. Your needs are different than mine. The best way to really make progress and to become more financially independent is to really focus on your situation directly. And I'm happy to do that, consulting or Zoom or consulting for free, or Zoom or whatever you need after today. Because I think finance is personal, I've set up this website that is really more a repository library that houses slide decks like this. I've got some books posted up there, business.louisiana.edu /finance is personal. I've got a 1-page handout that I'll put in the chat. All of these resources are, this is being recorded, all these would be available through the UL System websites. This is part of a 15-session Money Matters series this summer. We've got 2 behind us. We're doing financial and tax planning for international students. I'm away, today is that financial and tax planning for international students. I'm out of town next week at a couple conferences, but then we go back on June 20th. We'll focus on being an entrepreneur, which many people on our campuses are. Got 2 sessions on that on the 20th, and then a month later on July 25th, 5 weeks later. Most of these sessions will be at noon. This week we've been at 3, and then July 18th and 19th we should be at 3 p.m. also. Everything else should be at noon Central Time. Everything will be recorded. There will be transcripts. There will be PowerPoint decks. There will be 1-page handouts or for reference. So feel free to check in and engage however you want. And if you are professional staff, leaders, administrators on campuses, and you're interested in maybe customizing any of these topics or issues for your student population or professional population on campus, reach out to me. I'm open to that. We're going to do something probably with grad students at University of New Orleans. Hopefully, we're going to be able to develop something, and possibly at Grambling. So I'm totally open to that. If you have ideas about doing personal finance, financial literacy programs on your campus for any student population, international students or grad students or anyone else, touch base with me and we'll set it up. This is the series for the summer, and if there's more to do later, hopefully we'll be able to create something. This is what we're trying to achieve. We're trying to get some level of happiness, whatever that means to you individually. Your definition of happiness is going to be different from mine. It is a combination of short-term goals, long-term goals, family needs, financial needs. Today's focus is financial and tax planning for international students. And all of these dynamics, the goals and the needs, are probably more pronounced for international students than many of our other student populations for a variety of reasons. One, they've left home, you've left home, You don't have the family support. You're in a new culture, you're in a new world. You don't understand the systems. And so just surviving day to day is different. Many aspects hopefully are wonderful. Even disconnected from the financial aspects. There's many challenges. And so these goals and the needs are more heightened and more intense. The goals, certainly, you're here to get a degree, you're here to complete some academic program, but then there also may be other goals that permanent resident students don't have, such as getting a long-term visa, permanent residency, green card, after your studies and so forth. And so what we'll talk about today is some financial and tax related issues that kind of coalesce around these issues, hopefully designed, taking into account the specific goals, needs, challenges, and opportunities for grad students. I think when we think about quotes that apply to what we're doing today, I think for me, the focus is planning. Top left, a goal without a plan is just a dream. International students have made an enormous commitment to pursue your degree here. And it's part of some big personal, professional plan in ways that maybe it's not for many other students. It's a much bigger commitment, and as such, it requires perhaps a more focused and thoughtful plan. Takes as much energy to plan as does to wish. Just wishing for your goals, wishing for your dreams doesn't make it happen. You have to plan, you have to execute, and be intentional. And hopefully what we talk about today will cover some of that. I've introduced this slide for every personal finance population. And I think one thing I want to highlight today is everything on here absolutely applies for international students in just about the same way it does for everyone else. We always start with your goals, your values, your dreams. Who are you? What do you want? We look at your situation. Are you a student? Are you faculty? Are you staff? Permanent resident, student visa, whatever the case may be, that's your situation that defines you. And then the financial dynamics, the financial issues will evolve and flow from there. Again, they may be more intense or heightened for international students because the short-term and long-term may connect in different ways than they do for other students, but this dynamic is still going to be the same for everyone. And one thing I want to emphasize, and you'll hear this 2 or 3 more times, all the stuff at the bottom in red, the financial planning, all of that applies to international students just the same as it does for permanent resident or domestic students. What I mean by that, in the US, unlike some other countries, international students can do anything and everything financially that domestic permanent resident students can. In some countries, if you're on a visa, a student visa, or even a work visa as an expat, you are not allowed to invest. You are not allowed to own real estate. You are not allowed to enter certain retirement plans. In the US, you can do anything and everything. Just as I can as a US citizen, just as anyone else in the US can. There's a small caveat. The Department of State may review your either visa or your visa or your home passport just to confirm a background check, but legally you have all the rights. You as an international student on a visa, you have all the rights that I do as a US citizen permanent resident. You are a student, and so what you're able to do will flow from your education. And one thing I'll say probably 2 or 3 more times also, the most important, the most valuable thing you can do is to complete your degree. The most valuable financial decision you can make, especially as an international student, because you've committed and potentially sacrificed so much to be here. Getting that degree is of primary importance. So we'll focus on that. Let's start with 5 key issues for international students. Number 1, you must file a tax return each year, whether you earn income or not. For permanent residents, if you don't earn income, you don't have to file a tax return. International students on a visa, you do. You have to file a tax return to say, I didn't earn any income. In a couple of slides, I'll give you more details on that. But this is really important. You have to file April 15th. You must submit, if you have income, either from a graduate assistantship, work study, anything on campus, potentially even income from scholarships that may be taxable, or certainly a job, a salaried or part-time job from local business or otherwise. If you have income, you must file a tax return. If you are an international student, you must file a return with the IRS. It's not exactly a tax return. It's Form 8843. I'll mention that again in a couple of slides. You may be limited in what income you can earn. Many of our graduate students are not allowed to have full-time jobs if you're on a grad student visa. This is true for most undergrads as well. And so because you're limited in the income you can earn, makes it more important, A, that you control your expenses, and two, B, that you finish your degree. Right? So the financial planning, you don't necessarily have the option of taking a gap semester or a gap year in the States and going to work full-time to build up your savings. You could home, but then that may compromise your ability to come back and continue your studies. So controlling your expenses, finishing your degree, super important. Points 3 and 4 are going to be related. Occupational practical training is a bridge from being a student to being a professional. It is essentially a one-year extension of your visa after graduation. If you are a STEM major, science, technology, engineering, math, the bridge is not 1 year, but it's potentially up to 3 years. It's a 1 to 3 year extension of your student visa if you get a job in the US, in your major, in your chosen profession. The budget, it costs you $410 to apply for this. You need to coordinate it with your campus university. They need to sponsor it, and every university will sponsor it, so that's not the problem. The problem perhaps is finding a job that will sponsor you in this way. When I say sponsor, I don't mean sponsor in the same way that you might think of visa sponsorship, permanent residency sponsorship, but just finding a job that applies to your major and is consistent with the OPT guidelines. Before you graduate, you can earn income. One of the few ways that international students can earn a paycheck off campus is through curricular practical training, CPT. You can get a paying job or internship while you're still in school. And I'll have more details on this in a couple of slides. So OPT and CPT are similar and related. There are some strings attached to rules that I'll make you aware of in a few minutes, but they're great opportunities. CPT is a great opportunity to earn income while in school, and OPT is the great opportunity for once you graduate. So Shannon, the $410, just budget for the $410 fee. Make sure it's a $410 application for OPT. You have to have the $410 to apply for OPT in your budget. So we've had students that graduate, find a job, but don't have the $410 saved to apply. And if you think OPT is in your future, if you want to extend your visa through this route, which is the natural common route to do so, make sure you have $410 in your bank account that you can commit to a OPT application in the semester or at the time you're graduating. CPT, I believe, last I heard, CPT, there's no application fee, so long as you coordinate and communicate through your school. And then finally, as I said earlier, yes, you have all the investment, financial planning opportunities that a permanent resident does. Investing in stocks, bonds, real estate, crypto, anything. And this is unusual. Not every country does this. The US makes it very easy for anyone and everyone to invest in our economy. For better or for worse, hopefully for better. But I'll introduce some ideas and topics where certainly it's for better. So a little background that certainly if you're an international student, you maybe see where you fit on this this graph of looking at the past 15 years, or kind of the past 15 years, of how international students pay for college in the US. Most of it is personal and family money. Some of it is through the university, through scholarships in the orange, scholarship grants, whatever else the university can fund. Current employment in yellow, much of that is on campus, and then a variety of other sources, much smaller. If we were to compare this to a primary source of funding for domestic students, it would look very different, because there would be bigger sources from current employment, potentially bigger from the US college or university, and potentially less from the personal and family that we see here. So different mix. College is very expensive. International students in many ways are paying for that out of pocket in ways that not all domestic students are. And so managing your money and being conscientious about it is critical. I've got 5 frequently asked questions that we'll go through, and then 5 common areas of financial focus, financial planning. Number 1, how do I manage my time and finance to become financially comfortable upon graduation? This is not an international student question necessarily. It was asked by an international student workshop, but it's not exclusive to international students. And there's no way, there's no easy way, there's no direct way. It's about budgeting, it's about planning. Think of how much you budget and plan with your studies, how much time you're going to spend in the library, when you're going to read, when you're going to be at the lab. Do the same with your money. Do the same. Analyze your situation, analyze your needs, analyze your spending, figure out your debt, your income, your expenses, your impulses. Analyze your bad habits, make plans to change them. And quite honestly, certainly from my grad school experience, you may not be financially comfortable or feel like you're in control until you graduate and you get a job that pays you an income that gives you more flexibility. However, having a plan while you're in school, getting an early start on your planning, and developing habits that you need or required to manage your money more efficiently while in school will set you up for when you do get that higher income. When we think about budgeting, I can give you all sorts of tips, whether it's, consider buying in bulk, do potluck dinners in your apartment building, in your dorm, take your food to work, shop around for insurance, all these little things, pieces of advice that we give to everyone. It all applies the same to international students. Are international students allowed to invest in stocks, bonds, and financial products? Yes. If you have a Social Security, you can do anything that any US domestic resident can. Sometimes even without a Social Security, depending on the product, certainly bank accounts and credit cards you can generally do. And as I said earlier, this is unique. If some countries, as a US citizen, if I go to Switzerland, I cannot invest in the Swiss stock market. I cannot own real estate in Switzerland immediately. In many countries, that's true. The US, not true. In the US, you can do anything and everything that a permanent resident can. What about taxes? And this question is asked, what are responsibility taxes in bank accounts, or taxes on money in bank accounts? But it applies to just about everything else too. In the US, we pay taxes on income. You do not pay taxes on assets. You do not pay taxes on balances. We pay taxes on income. And so if I have $250 in a savings account, and in a given year, the bank pays me $15 in interest, I owe ordinary income taxes on that $15, potentially. Second, I'll clarify that potentially. So we owe taxes on income. If I invest $250 in the stock market and I have a $15 gain on investing in Google stock, for example, that $15 gain will be taxable. If what stock is down? Disney's down this year. If I invest $250 in Disney stock and that $250 becomes $220, I have a $30 loss. That $30 loss can be used to offset other gains that I have. So the $15 gain from my savings account plus the $30 loss from investing in Disney, that's a net $15 loss. but I could also apply to others. So we pay taxes on income. If we have negative income, such as losses on investments, the IRS is not going to send us a check for that lost income or for taxes saved on that lost income, but we can apply that lost income to offset other income, which is kind of nice. Many people hate paying taxes. My attitude is kind of weird. I kind of like paying taxes because if I'm paying taxes, it means I have income, right? I'm not paying taxes on anything other than income. And so when my income is higher, my taxes are higher, and I kind of like having the higher income. So as I said, with investing, you'll owe taxes on the investment gains or you own with the bank account. There's a difference in timing. Short-term investments, any investment or cash flow savings that has a lifespan of less than a year, less than 12 months, you're going to owe ordinary income taxes. So just like a paycheck would be. If you're a longer term investor, you have money invested in Google or Disney stock for more than 12 months, more than a year, then it's a long-term capital gain, which is going to have a significantly lower tax rate. So don't be surprised if different sources of income have different tax rates applied to them. It could be, paycheck versus bank versus long-term, short-term. Having said all that, so earlier I said if you have $250 in a savings account and you get 15 in interest, you're going to owe taxes on the 15. In the US, the IRS, the Internal Revenue Service, the administrator of tax reporting, part of their process gives every individual a certain buffer or allowance that we call a deduction, a standard deduction. And basically what that standard deduction means today is if your income, total income for the year is less than $15,000, 15, then you're not going to owe taxes at all. You get a $15,000, you have $14,000 of income, you have a $15,000 deduction, 14 minus 15 is -1, effectively brings your taxable income down to 0. So that standard deduction basically reduces your taxable income. And if your taxable income is 0, you're not going to owe any taxes. So if your cumulative income for the year is less than about 15,000, you're not going to owe any taxes, which is kind of cool. So the 250 and the 15, that example, if that's all your income, all the income you have for the year is $15 on a savings account, you don't owe taxes. However, as I said earlier, point number 1, I think earlier, you do have to file. You do have to tell the IRS, hey, I made $15 in interest, but because of the deduction, I don't owe any taxes. This is especially true for international students and international professionals. Not just if, but because your failure to report, failure to file your tax return may jeopardize visa status. It may jeopardize residency status. And so if you file, check the box, you're done, you're clear, no problem. If you don't file, it may give immigration and naturalization a reason to take a second look at your visa or permanent residence application. So what are your responsibilities with taxes? What I put on this slide is incomplete. This is how we calculate what taxes we owe, but the key, maybe the most important part of what the responsibilities is, any income you have to file. You have to tell the IRS that I filed, that I had this income. More specifically, as far as investments, students frequently hear about individual retirement accounts. As students, you don't have a company that's giving you a retirement account or retirement benefits. In the US, unlike most countries, almost everything we do in retirement planning is by the individual. We don't have country pensions. We don't have very many company pensions. Most retirement planning is done by the individual. In my case, I do my retirement planning is done by me, the individual. My university, my employer, offers me a company-sponsored retirement plan, but graduate students or international students would not have that. And so maybe the best way to get started on planning your saving for retirement is through an individual retirement account, an IRA. This is a IRS created entity, tax preferred structure. There are tax benefits. Basically, you can either defer taxes, or in some cases you can avoid taxes. There are two types of IRAs. There's a traditional IRA and a Roth IRA. You may have heard of both. For most students, international and domestic, a Roth IRA is probably better, because Roth IRAs are best when your income is low. If your income is low, the Roth is better than traditional, because you get the tax benefits in the future. In the future, in this case, would be when you're 60 or 65 and you're in retirement, you're withdrawing money. Whereas with the traditional, you get the tax benefit today and you pay taxes in the future. So for me, mid-career professor, professional, my income may be about as high as it's ever going to be. My tax rate may be as high as it's ever going to be. When I'm 65 and retired, my income is probably lower than it will be today. My tax rate might be lower. So for me, a traditional IRA may be best, because I'd rather pay taxes in retirement, to pay taxes on my income in retirement, than today. For students, your income today may be as low as it's ever going to be, and you might want to prefer to pay taxes on your income today rather than sometime in the future, and certainly in retirement when your income might be higher. The Roth, you pay taxes today and never again. With the traditional, you don't pay taxes today, you pay in retirement. So the catch for both of these, for Roth and for the IRA, is to save and to invest, you have to take money out of your bank account or out of your savings checking and allocate it towards retirement plans. And if you're a cash-strapped student or graduate student, you may not have that money in your budget. As I said in yesterday's session, one of the best things you can do is just set up an IRA, even if you don't contribute, even if you don't invest. Having it set up gives you the freedom, the option, the flexibility to invest when and if you're ready. And then finally, how does an international graduate student that does not earn during summer pay for his or her rent? The answer is CPT, curricular practical training. It allows you to have a paying internship while in school, must be arranged through your school, and all of our universities in the US system have international offices that support this and can help you. That summer job must be related to your degree. So if you're a finance major and you get a job as a barista, that may not qualify. But any type of business job, if you're management of the coffee shop, maybe that will apply. One of the catches, and want to make sure that you don't get caught up by this, if you have a job for more than 12 months, you cannot get CPT. Sorry, you cannot get OPT, occupational practical training. So you can have CPT for 11 and a half months, the internship, the paid career while in school. But if you get over 12 months, then you're disqualified for OPT. Sorry about the slide. There's a typo in the slide. You cannot get CPT, should be you cannot get OPT. And so if your goal is to extend your visa long-term after graduation, make sure you don't do CPT for more than 11 and a half months, 12 months, certainly. Beyond that, if you're unable to get a job through CPT, there's no easy way. It's about budgeting and planning. Maybe you go back to your home country and get a job that actually where you can get cash. It's about budgeting. It's about analyzing your situation, your bad habits, and so forth. So those are 5 frequently asked questions. Just checking the clock. We're at 30 minutes. Talked about budgeting, create a budget, learn to live within your means. Because you have limited opportunities to increase your income, you want to avoid going into debt. As you're analyzing your income, separate your cash flows into fixed expenses, rent, tuition, your books, utilities, those non-discretionary things you have to pay, discretionary clothing, entertainment, travel, otherwise, and unexpected. Have an emergency fund or something for unexpected medical bills, taxes, what have you. Budgeting is maybe more important for international students, especially because you have limited opportunities to increase your income. We've talked about OPT, occupation. I keep saying optional practical training, not occupation. Plan to save $400 for OPT application fees once you graduate. It is an off-campus employment benefit for F1 students. When you complete your education, this will extend your visa effectively. Again, it's 1 year for all non-STEM majors and up to 3 years for STEM majors. The job must be in your field of study. It must be full-time. It must be full-time or full in your field. And I've given the link to International Affairs at Louisiana. Your campus, your office, that's on our campus. Your campus, your office probably has a similar office that can help you figure out how OPT works and what you need to do. I teased you earlier about income tax. What do you need to know? As a non-resident student in the US, you're legally required to file a tax return if you received income. So the tax return in the US is called the 1040, 1040. There are different versions of that. You'll figure out through either software or other means which version of the 1040 applies to you. But you're legally required to file. As I said earlier, you need to file so you don't jeopardize visa or citizenship status otherwise. Right? You never want to give the US government a reason to put a yellow flag or to question the legitimacy of your residency. You want to control the options and you want to control your future. You don't want the US government to control it fully to the extent that you can. However, even if you didn't work and you didn't receive income, you might think you don't have to file anything. As an international student, that is wrong. You're obliged to file Form 8843 with the IRS. Easy to download, easy to file. It's basically just reporting, I was in the US during this year. I received these educational benefits. I did not earn any income. Thank you. Have a nice day. At UL Lafayette, we have an arrangement with a company called Sprint Tax. There are dozens or hundreds of software and personal tax providers. We work with Sprint Tax because we have found Sprint Tax has the best program, the most depth for international students. H&R Block, Jackson Hewitt, Intuit, Quicken, they all have programs that are good, kind of generic programs. And for me, a US citizen, I use one of those. But they don't have the depth or breadth for international students like Sprint Tax does. I'm not a consultant, I'm not paid, just we have found that it's very good. So as an international student, you have to file either a 1040 if you had income or 8843 if not. And we'll conclude with these 5 topics just to highlight, remind some points that we've talked about, but to highlight some maybe differences between living in the US and living in your home country. Health insurance, you are probably required to have it. I think you are. Our university, you are. Most universities does not provide it. Our university does not. Our university can help you find it, but in many cases, you have to find health insurance in the US kind of on your own, private market. Most of your home countries probably provide either nationalized or universal healthcare. We do not. So shop around, plan ahead. And then a very common issue related to this that we hear from a lot of international faculty, students, otherwise, lots of international members of our community. Our hospitals are for-profit businesses. They're going to send you lots of bills, lots of notices, lots of information they may look like a bill, but isn't a bill. Our practices are very different from what you're used to. Read everything, read the fine print, make sure you know what you're reading, especially before you pay anything. Ask lots of questions. And some haven't said this yet, and this is maybe the best piece of advice I can give you, that sometimes the best piece of people you can ask questions of are international faculty. Faculty at your campus who were international students in the US at one point and have graduated or been promoted to faculty, they've been in your shoes. They were international students. Everything I'm saying today, they've experienced, and they can help you. It's not part of your program. It's not part of your discipline. Part of living, thriving, and surviving in the US. Sometimes the best resources are your faculty. Cost of living and standard of living, the prices may be very different. They may be a lot higher, they may be a lot less, but this is always more, just more and more reason to focus on your budget. And again, when in doubt, ask for help. Always avoid pressure to live a U.S. standard of living. That I say that to everyone, international students and in domestic students, but don't feel pressure to live a certain type of standard of living while in the U.S., while in college. You can worry about that once you graduate. But be very protective of your money while you're in college. Shannon, let me come back to that question in 2 minutes. Or let's do it in the career planning slide. So, establishing a financial presence, do as much as you can. When you're in the U.S., get a bank account, get a credit card, establish as much of a financial presence as you can. Give yourself as many options as you can if you choose to apply for permanent residency sometime in the future, if you choose to apply for OPT in the future. It can never hurt to show that you've been living the life of an American in the US for 2, 3, 4, 5 years. That will only help your application and your prospects. Career planning, again, filing for OPT should be step number 1 if you plan to stay. To Shannon's question, if I found a company which is willing to offer me a position, but it's not related to my field, what to do? So I think there are kind of two possibilities within that question. Number 1, they offer you a position that's totally different, right? So you're an engineering major and you get a film production offer. What should you do? You may not have many options. OPT might not be an option for you, or CPT if that's what you're looking at. Must be related to your field of study and your expected profession. I've heard stories of people being rejected or denied because the job was not similar enough to their field of study. That's one possibility. The other possibility is maybe you can work with your employer. Your employer likes you, the employer wants to hire you. Maybe you can work with your employer to either change the title or restructure the position a little bit so it does provide some overlap to your job. If you're a finance major and you find a job that when you're doing that's 5% finance and 95% marketing, that can still work. Or 5%, if you find a job that you're a biology major and your job is, you find a job that's 5% biology and 95% chemistry, I don't know if those exist, but that can still work. And so you can be creative without lying. Lying to the US government is a felony. We don't like that. But you can be creative in explaining the position and justifying how this position helps you advance your education, advance your career, potentially by working with your employer to either reframe the job, redescribe the job, to make it fit better with your field of study or your career path. But again, I have heard stories of people being rejected because it was not similar enough, and which is very unfortunate. But maybe with a little bit of planning, you can maybe talk to your employer and get them to redescribe the job position or the job title, potentially. As you're thinking about career planning, thinking ahead, should you get another degree? We all know graduate students or people with multiple graduate degrees, thinking about where you're going to live, here or home or different states. And then the ultimate, most difficult job decision is, should I take a good job with uncertain visa options or permanent residency options versus a mediocre job with a promise? That all depends on you, your goals. I've known students who do both, and some are willing to roll the dice on a good job with uncertain options. Some just want the visa, and there's no judgment. Both make total sense depending on you and your goals. And then finally, the uncertainty. uncertainty probably affects international students more than anyone else. We can never control uncertainty by definition, but we can create plans with different scenarios that will make uncertainty less of a surprise or less damaging when it happens. What if there's another pandemic? What if your advisor retires? If you're a graduate student and your degree is totally focused on one person, dependent on one faculty member, what do you do if they retire? What do you do if they go to another university? How do you adjust? And by you creating scenarios, you having a plan B and a plan C, you know how you're going to respond if this happens. You maybe can't totally control it, but you can go from plan A to plan B. What if the US dollar strengthens? This is a story I hear from a lot of students. When the US dollar strengthens, that means your home country currency is weakening, it's buying less, and so it costs you more home country money to pay for your education and pay for your standard of living. What's the strategy? I'm a finance guy, I should have strategies. The strategy I think a lot of students use is they hedge by moving as much money as they think they'll need into the US as early as they can, either whether that's family money or work money or whatever. But by having money in the US in dollars in a US bank account, then you're not as susceptible to currency changes. You're making a commitment for the exchange rate at the time you move the money, but at least you know that if the dollar strengthens, you're not going to be hurt. If the dollar weakens, then you kind of lose out financially because you ended up paying more than you needed to potentially. But by committing early and moving money to the US earlier, you're hedging and you're committing, and you're taken care of if the dollar strengthens. And if the dollar weakens, then c'est la vie, you lost a little bit of money. To me, that may be better than the dollar strengthening and you have to quit school and go home, right? Losing a little money, paying a little more for college or grad school may be preferable to dropping out and going home. What if you start a family? What if you win the lottery? These are big issues. Certainly starting a family, if that happens, then there's a big change in your financial planning and you'll adjust, right? That may not be totally uncertain, but by having a plan, coming up with plan A, plan B, plan C, you can't control the uncontrollable or uncertainty, but you can adjust quickly when it happens because changes will happen. Ask for help. In many cases, your best source of information will be international faculty. Again, plan ahead, plan A, plan B, plan C. Communicate with family. If you have a spouse in the States who is not a student, they're going through the experience with you, share with them. They're going through this with you directly and emotionally. Let them help, share with them, share your issues, share your struggles, share your needs. Share with family back home. Everyone's part of this. And then finally, finish your degree. Again, because there are more constraints, finishing that degree becomes ever more pressing and ever more valuable. Shannon's question, if I defer to my degree, am I allowed to find a job? For example, I'm supposed to graduate in 2 years and I chose not to finish my last year's classes for a while. So it depends on your visa and kind of the agreement of the visa. If you can take a gap year as an international student, effectively, a gap year where you're working. The visa may not allow that. Most F1 visas are for being a student. And the caveat to you must stay in school with your F1 visa are CPT, curricular practical training, where you take a job with the CPT, or OPT after graduation. So in your case, in the example you gave, supposed to graduate in 2 years, I choose not to finish last year's classes for a while. If you take that job under the conditions of CPT, curricular practical training, that is allowed, that is encouraged with with an F1 visa, and that gives you the right to defer. And you should be able to pick up classes and continue and finish ahead. Your visa may require you to be at least a part-time student. Potentially it requires you to be a full-time student. I've seen both. But if your visa requires you to be a student, then completely taking off from school may not be an option. And so, but CPT, curricular practical training, students who do that, they arrange it through the university. They're either getting paid, they're getting credit. It is coordinated through the university. So even if they're not enrolled in classes, they're doing CPT with the blessing of the university. And so it's still aligned with the F1. If you just leave the university, don't do anything, you go wait tables for 2 years, that is probably a violation of your visa. And even if you say, I'm intending to go back to school in 2 years, I'm saving up for 2 years, that is probably not consistent with your visa. But again, might depend on your visa. And if you want to pursue a job related to your studies, then CPT, curricular practical training, is probably the safest, best route to go. So Eduardo's question, when you say paying taxes today with respect to Roth IRAs, do you mean during tax season every year, every time you receive salary, et cetera? Yeah, cool question. I was being kind of sloppy with how I described that. Checking the clock. So let me give you the example. With a Roth, you get a pay. So let's say you get a paycheck, right? So forget about the Roth. You get a paycheck. Let's say you get $1,000 paycheck from work study, from employer, whatever. You get $1,000 paycheck. You're going to pay taxes. You're going to pay U.S. federal income taxes on that, and that $1,000 maybe becomes, let's say, $800. So you have net after-tax cash flow of $800 on your $1,000. With a Roth IRA, you take some of that $800 and you invest it into a Roth IRA. You get to choose what you invest in. Could be stock market, could be cash. You don't really have to take aggressive investments, but you get a big menu of different options to choose from. So you've invested $800. Because that $800 is related to the $1,000 of salary that you earned, after tax you had $800. Let's say you put all $800 into your Roth IRA. Take that $800, you put it into your Roth IRA. You've already paid taxes on the $800, right? Because you had a $1,000 paycheck that became $800 with federal taxes. You've paid $200 of taxes. With a Roth, you will never, ever pay taxes again. And so I think to your question, with a Roth, you pay taxes today, it's through your paycheck. It's with a Roth, when and how you pay taxes is kind of totally unrelated to the Roth. It's all related to your paycheck. If that made some sense, then hopefully that's okay. With a traditional, let me compare the Roth to the traditional. Same example, you have a $1,000 paycheck. After taxes, you have 800, but you take that 800 and you put it into your traditional IRA. With the traditional IRA, yeah, thank you, Shannon. With the traditional IRA, you're going to tell the IRS, hey, I took my $800, I put it into this tax-preferred retirement account. Give me my money back. And so the IRS will give you a tax refund on that $800 today, whereas with the Roth, you get the tax benefit in the future. It's hard for me to explain without a spreadsheet or exhibits, basically. But with a Roth, the tax implication, you're paying taxes on whatever money you put into a Roth is after tax today. You've paid taxes today. With the traditional, you're going to pay taxes in the future. And so that's really the difference. You only pay taxes once on either of them, right? And you only pay taxes on the income, right? So it's the income, and the income is not income of the Roth or the IRA. The income is your salary, right? Your paycheck that you're using to fund the Roth or the IRA. I hope that makes sense. If not, contact me, I'll try again. This is what we're trying to achieve. Happiness through our short-term and long-term goals, by paying attention to our family needs, our financial needs. We set our goals, we look at the reality, we figure out what we can do, we create a plan, we execute. The future is going to change, we're going to have to adjust, so we adjust. And we keep doing this over and over. This is just what you do with your education planning. And it's just maybe more intense or sensitive because it's money. And money is very important to us, right? It creates a lot of opportunities and issues. Yeah, so you as students, whether you know it or not, you are much better planners than most of the rest of humanity, right? So on the right in the green, we've got grad school strategies, student school strategies. You identify your resources, you identify your goals, you do your planning, and then you go, do a great job with your studies. Apply the same approach to your finances. You look at your financial situation, you do your budgeting, you identify your income expenses, you identify your goals, you make a plan, and your actions are not going to go according to plan, perfectly according to plan. So you monitor, modify, and keep moving on. You, trust me, I spend my life talking to people who do financial planning. You are better wired, better equipped to make these long-term plans than just about anyone else in humanity. And so the diligence that you put towards your education and your studies, put it to where your finances and your future self will thank you. That's today, financial and tax planning. Our next session is in 2 weeks, June 20th. We start talking about side hustles, introducing side hustles, and financial planning kind of for the whole family, bringing in the whole family. So we'll kind of move from a student focus to kind of everyone focus, students, faculty, staff, professionals, everyone else in the UL system. If you can join us, please do so. We'd love to have you back. All of these resources will be on the UL system website. And if you don't find them there, you can contact me. I'm creating all of them. I'm sharing all of them. I want to talk to you in the future, so feel free to reach out to me directly and we'll talk. Let me stop sharing. Let me stop recording. Let me thank